They pay marketing, they pay employees, they pay rent, they buy back stock, they pay lawyers, they do everything they're going to do. And the profit that they have before interest, tax, depreciation, amortization, which the last two are not cash. So before interest and tax, they have $85 billion sitting in the bank account. Okay, that's profit, not cash. You move over into the cash flow statement and you see cash flow from operations. That $85 billion shrinks a little bit because there's probably a difference between book tax and actual tax. There's some non-cash things that hit the balance sheet, so that's cash timing. So your $85 billion shrinks by $10 billion to $74 billion. But that $74 billion is real money. That's why we focus on the cash flow statement, because the auditors, when they audit financials, they will call up the bank that Meta uses. I'm going to guess JP Morgan because I like the bank. I also like Wells Fargo, but the different story of why. They'll call up JP Morgan and say, hey, Mr. Morgan, what did Meta have January 1st of this year in the bank account? They had, $82 billion, making a number. Okay, what do they have at the end of the year? $85 billion. Okay, so they get a third party to verify a hard dollar amount that they had on premise. So it's much easier to tie physical cash than it is a profit, which can be adjusted by revenue recognition policy, capex depreciation policy, how they pay their employees. Is it cash or is it in stock? Do they have warrants? Is stock convertible? Are bonds convertible into stock? There's lots of ways you can kind of gear the P&L, but you can't make up is the cash in the bank. That's why we like the cash flow statement. But back to my point. So the cash, the $85 billion of profit turns into $75 billion of pure hard cash. Like Scrooge McDuck kind of cash they can wallow around in if they wanted. Zuckerberg could out there and wallow around on it, which is kind of a funny thought. But then what do they do? Okay, they peel off $37 billion and go build a tech center. Well, they're still left with $40 billion or so. They borrowed a little bit of cash. They got an extra 8 in. So they're at $48 billion, $45 billion of free cash flow. That's how I get this number right here, $45.8 billion. That, my friends, is the free cash flow to equity. And I want to point out something very interesting.